Welcome to episode 19 of Motivating Mondays, a weekly podcast and YouTube series dedicated to help Canadian job developers and other employer engagement professionals develop the tools, resources, expertise, and network to excel in achieving sustainable employment outcomes for their clients or students. My name is Christian St. Cyr. I am the National Director of the Canadian Job Development Network, and today we're looking at new research suggesting that cuts to immigration will not only drive down the unemployment rate, but will also raise wages. Is this even possible with looming tariffs and economic uncertainty? So the Conference Board of Canada recently reported that as immigration continues to slow, we can see a corresponding increase in wages. Not only will people be earning more, but at the same time we can expect the unemployment rate to fall. The Conference Board believes these dynamics will drive the unemployment rate down in the coming years, down to 6.2% in 2026 and down to 5.8% in 2027. Now, this is not an unexpected outcome. As we look at future job growth, most projections suggest that we will need as much as 50% of our future workforce coming from immigration or other strategies for encouraging people to participate in the labor market who aren't currently in the job market. Now, this might include encouraging older workers to work for longer hours, for longer periods of time, supports for stay-at-home parents to return to the workforce, or addressing other challenges that are keeping people out of the workforce, such as limited access to transportation, greater support with assistive technologies, and increased skills training. We can also expect employers will turn ever increasingly to AI and other forms of technology, eliminating larger portions of entry-level jobs, a factor that has already had a significant impact on limiting youth employment. Prior to last year, we were increasingly reliant on temporary foreign workers, international students, refugees, and traditional immigrants to meet our labor market needs. Having restricted all of these groups for nearly a year, increased pressure is being placed on employers to hire individuals they might not otherwise have hired, which brings a corresponding decrease in the unemployment rate. This could easily explain why we haven't seen more of an impact from the current trade tensions that we've had with the United States. We obviously live in a world of unknowns, with potential tariffs and how much those tariffs are going to be, and how this will impact specific industries and local employers. For my part, I've been expecting a major downturn in Canada's and frankly the world's economy since 2019. We've seen continued economic growth in nearly all aspects of the economy, from real estate to inflation, for more than 16 years now. And while this level of economic growth is unparalleled, who am I to say that we are ready for a complete economic collapse? I am not an economist. Who says what goes up must come down? If the Conference Board of Canada says we're going to see lower unemployment and higher wages in the years to come, why should I argue with this? Or we could have an economic collapse the likes of which we haven't seen since the Great Depression that could take decades for us to emerge from. Who knows? According to the June 2025 Labor Force Survey, Canadian employment has increased by 83,000 or 0.4% in June. And the unemployment rate rose by 0.1% to 60.9%. The unemployment rate fell 0.1 percentage points to 6.9%. This is despite almost daily news of economic updates and trade tensions with the United States. In the meantime, the Conference Board of Canada is projecting that hiring will be subdued for the rest of 2025 as businesses worry about expanding their payrolls amid trade war uncertainty. We're already seeing wage increases. Average hourly wages rose 3.4% year over year in May, which was unchanged from the pace that we saw in April. Trade is not the only tool at the disposal of government. The Bank of Canada has kept its benchmark interest rate steady at 2.75 percentage points as of last week. Officials have said that they will wait for more clarity on how tariffs are affecting the economy and inflation before they make any changes. The central bank can lower its policy when it wants to stimulate spending and give the economy a boost, but it keeps it elevated when there are fears of inflation getting out of hand. Having a low interest rate has not resulted in rising inflation to this point. Annual inflation held steady at 1.7% in May, according to StatsCan. Now, on the surface, the whole situation seems so positive, but there are some contradictory black clouds on the horizon. A new survey conducted by Harris Poll on behalf of the Express Employment Professionals reveals that while most hiring managers 69% still feel positive about their company's hiring outlook for the remainder of 2025. That optimism isn't quite as strong as it was a year ago when 74% of employers were optimistic about their hiring. At the same time, concern is growing, with 46% now expressing a negative outlook, and that was increased from 38% last June. While approximately about 2 in 5 companies, 43%, still plan to increase their workforce in the second half of the year, that is a decline. Last year it was 49%. For those planning to hire, the top reasons that they're looking to hire include managing growing workloads, 51%, filling newly created roles, 35%, and to replace employees lost to turnover, 42%. The proportion of companies planning to cut their number of employees, 13%, has increased compared to last year when it was just 8%. The majority cite cost cutting as the primary driver. That was said by 67%, followed by adapting to government policy changes, 30%, and responding to declining demand. That was said by 25% of respondents. The types of roles governments are targeting is also evolving. Companies are now most likely to hire mid-level employees. That was said by 46% of employers. As entry hiring, 43%, has dropped compared to last year when it was 56%. Full-time positions remain the most sought after that they're posted at 74%, while 1/4 of companies, 25%, plan to hire for part-time roles. So as we consider the whole situation, there is clearly economic analysis that would suggest the economy may be stronger a year from now. Certainly in the short term, employers are concerned about how all of this will unfold. In conducting job development, I believe right now it is critical to present our clients and students as a safe, reliable choice. If you have tools such as wage subsidies, skills training, or other financial incentives at your disposal, this is likely a good time to market them in concert with presenting clients and students as strong candidates. As to whether wages will go up, there is little uncertainty in my mind that if we are confronted with significant tariffs, this will have an unavoidable impact on inflation. 2 or 3 years from now, we all may be making a lot more money. It just might not seem that way as the price of goods is outpacing these increases. One more thing to think about. Prior to the election, the Liberals did enact a number of limitations on immigration, as I believe they were responding to what the majority of Canadians wanted, whether it was right or wrong. To drive down unemployment or raise wages, labor force scarcity needs to continue. It's not actually that scarce. Last week, StatsCan reported the number of unfilled job postings has never been this low since 2017, so 8 years. So what do you think? Will Prime Minister Carney continue to limit immigration? This is a key factor. According to an article in the Hamilton Independent, Mark Carney has hired an advisor named Mark Wiseman. He is a well-known financier and co-founder of the Century Initiative, which supports a Canadian population of 100 million people by the year 2100. This raises speculation that Prime Minister Carney isn't really all that bothered by disruption from record-high immigration. So we'll have to see where it goes. For everyone who is registered to attend Developing a Comprehensive Approach to Job Development, taking place September 8th to 12th, we are sending out confirmations and calendar invites this week. If anyone has any difficulty with that, please let me know. If you haven't registered for the workshop, Developing a Comprehensive Approach to Job Development, just go to, and you want to know more information, just go to jobdevelopment.org/pro-D. We've also secured some amazing affiliate partners for the National Networking Day for Job Developers on September 19th. These include CERIC, who coordinates Connexus every year, Aspect BC, CDP Ontario, the Nova Scotia Career Development Association, and Quebec's Provincial Employment Roundtable. We would love it if you could join us. And if there isn't a session that's planned for your community, we would love to help you organize one. To learn more, just go to www.jobdevelopment.org/sponsors. Thank you so much for joining us. Please click the like or subscribe button in your platform. Check us out wherever you download podcasts. We'd also love it if you could follow our YouTube channel and or rate or review the podcast. Now, we do these sessions live and for free every Monday morning with job developers from across Canada, and it would be great if you can join us. Just go to jobdevelopment.org to learn more. If you have any questions, send me an email at info@jobdevelopment.org. Otherwise, thank you so much for your time and have an amazing week.